Good day everyone, this is Viet and welcome to my weekly Forex Outlook. At the end of this video, I will discuss a high-risk trade that I mentioned a few weeks ago which turned into a 5-to-1 reward to risk winner. My only trade for the week was New Zealand Japanese yen 6 hours short on Tuesday. Price dropped just low enough to fill my self-stop order before continuing upwards. It all happened within the first candle of the trade, so there was no chance for me to keep my losses small. Let's take a look at possible trading opportunities for next week. Australian Japanese yen tested 86.40 resistance and it appears to be holding. Friday's candle shows early sign that sellers is beginning to take control. I can see a high-risk trade on offer if market opens on Monday without significant gap. A short can be taken during Monday with stop above 86.40 and targeting 84.20 area. There is interest rate decision for the Australian dollar on Tuesday and it is the biggest risk that I can see. I prefer not to take on excessive risk just to be in a trade. There are always better opportunities elsewhere. Australian New Zealand dollar daily chart is showing a very similar setup to Australian Japanese yen, but in the opposite direction. Price hit 1.1080 support and Friday's daily candle shows strong intention from buyers. Again, the risk from Tuesday's interest rate decision is more than what I can tolerate, but I will be on the lookout for better opportunities to go long from support with lower risk. EURUSD is almost at 1.1480 weekly resistance level. This is a key level that had rejected price many times last year. Every time buyers push up to this level, sellers had taken control to push it back down. I will be watching on multiple time frames for signs of sellers in control at resistance to go short. British pound Australian dollar had been on a steady decline and now it is close to 1.8360 weekly support level. This level has seen a lot of action in 2014 and early 2015. If price hits support and I can see signs of buyers in control, then I will be looking for opportunities to go long. Last but not least is USD Japanese yen. 2 weeks ago, I had a successful long trade above 111 support and now price is approaching this level again. The plan is going to be exactly the same as last time. I will look for signs to indicate that buyers are strong at support and find low risk opportunities to go long. In my video on the 6th of March, starting at 2 minutes 35 seconds, I discussed an idea for a swing trade on USD Canadian dollar using a sell limit order at 1.3440 with stop at 1.3640 and target at 1.2830 area. It was a high risk trade which did not fit my trading plan. Instead, I traded a similar setup on a 4-hour chart. On Friday, I received an email from a viewer to say that she took on board my suggestion and took the trade. She used a 100 pips stop and her target of 500 pips was hit on Thursday for a reward risk ratio of 5. I wanted to share this story for 2 reasons. Number 1, everything I discuss in my videos are entirely my views, therefore they are not trading recommendations. I understand that some viewers would try out my ideas, but that is done at their own risk. Number 2, this is a great example of a trader being rewarded big for taking high risk. Too often you will find traders take a high risk trade only to come out with a tiny reward, often much less than 2 times risk. But in this case, the trader was able to stay committed and received a big reward for doing so. I am happy to hear that someone else was able to turn my ideas into a profitable outcome. I give all credits to this person for being able to take action. My name is Viet of Axis Partners and this has been my views on the Forex market for next week. Thank you for joining me today and I look forward to see you again in my next video. Bye for now.